All right, let's talk Bullish. They just dropped their first ever earnings report as a public company, and let me tell you, it was packed with some major surprises. We're going to break it all down for you. Okay, so let's get right to the headline number, 98 cents. That's the beat. I mean, think about that for a second. Wall Street was actually looking for a small loss, about 5 cents a share. Instead, Bullish comes out and posts a 93-cent profit. That's not just a beat, that is a complete demolition of expectations. And it wasn't just on the earnings per share either. This was a beat across the board. You've got adjusted revenue coming in strong at $57 million, but the real jaw-dropper, the bottom line. A year ago, they lost over $116 million. This quarter, they made over $108 million. That is a gigantic, nearly $250 million swing from loss to profit. You just don't see turnarounds like that very often. So that brings us to Section 1, guidance, growth, and a license. We're going to dig into the engines behind this really strong quarter and what the outlook is from here. Because the big question is, right, what's actually driving all this? And more importantly, can they keep it up?
Well, if you look at their guidance, management is basically telling us, hey, this is not a fluke. They're guiding for Q3 revenue to ramp up even more, to somewhere between $69 and $76 million. So they're not just saying the growth will continue, they're signaling that it's actually going to accelerate. That's a huge vote of confidence.
And what's giving them all this confidence? Well, a huge piece of the puzzle is this, the NYDFS bit license. Now, for anyone who follows the space, you know this is the holy grail of crypto licenses. It is notoriously difficult to get. Think of it as a massive regulatory stamp of approval, and it's their golden ticket into the US market, which is set to kick off in Q4. And the CEO, Tom Farley, he didn't mince words on the earnings call. He basically said, look, the US is the biggest market by far, and we're about to go after it. This isn't just another market for them. They see it as the single biggest growth driver, a place they've been itching to get into. But here's something else that's really interesting. It's not just a US expansion story. The business itself is evolving. Take a look at their subscription revenue. You know, the steady, predictable stuff, like liquidity as a service and CoinDesk data. That piece of the pie has grown from just 28% of the business all the way to 45%. Why does that matter? Because investors love that kind of recurring revenue. It's less volatile and shows a much more mature business model. So if you're watching Bullish, this is basically their game plan. This is the catalyst map you need to pay attention to. Number 1, nail the US launch in Q4. 2, hit those aggressive Q3 numbers they just promised. 3, keep signing up new institutional clients. And 4, be ready to capture the upside when the broader crypto market heats up. It's a pretty clear checklist for investors to follow. Okay, which brings us to Section 2, a tale of two tapes. Because if everything sounds so great, why is the stock performing so poorly? This is the big disconnect we need to talk about. And this slide really lays it all out. On one hand, you have the earnings report, which is just fantastic. A huge beat, they raised guidance, they've got this massive US catalyst. But then you look at the stock chart, and it's a horror story. Down about 32% in a single month. It's getting dragged down by the whole crypto sector and that classic post-IPO selling pressure. So where does the stock go from here? This is the million-dollar question, isn't it? When you see a company's fundamental story and its stock price moving in completely opposite directions, you have to ask, is this a giant red flag, or is this a massive opportunity staring you right in the face? All right, let's get into Section 3, the next call, our take. We've looked at the numbers, we've looked at the catalysts, so here's our prediction for what happens next with Bullish and our official call on the stock. Okay, so here's our thesis. For the next quarter's results, we think they're going to meet or even beat the high end of their own guide. They set the bar high, and we think they'll clear it. Now, for the price action, look, it's going to be volatile. It's tied to crypto, that's just the reality. But we believe that as they successfully execute on this US launch, you are going to see a fundamental re-rating of the stock. The market will eventually have to catch up. And that's why our official rating here is outperform. When you boil it all down, you've got a few really powerful drivers. A massive, untapped US market is opening up for them. Their business is getting stronger and more diverse with that subscription revenue. And their valuation right now just seems totally disconnected from how well they're actually running the company. Plus, you can't forget this management team has deep experience from places like the New York Stock Exchange. The story here seems pretty clear. And as always, a quick reminder, this is not financial advice.